What's up, everyone? It's Scotty with Money Vesting. So there was a report released by LPR Research quoting that the biggest buy signal in over 100 years has just been triggered. So my goal in this video is to break down that report, talk a little bit about what those indicators are and what the success ratio of that indicator is and what the forward next 12-month returns for the S&P 500 look like. So hope you guys enjoyed this video. Find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon is going to be down below. If you're interested in joining us, there is a 16% annual discount available till the end of this month. After that, it does expire. And speaking of discounts expiring, we do have the options course currently launched. So it's a brand new course available for everyone, and the coupon code launch will expire tonight. So tonight is literally the last day if you wanted to take advantage of it. It's a brand new course we launched, and again, you can get 50% off, and the bundle is also 50% off. After tonight, it is going to go away. So if you want to get access to all three courses, fundamental, technical analysis, and options analysis, it is going to be 50% off. And of course, you can access all the private videos through Patreon of the 17 growth stocks that I'm buying with my fair values on these companies as well. So this right here was the report. A more than 100-year-old buy signal just flashed in the stock market. So more than 100-year-old buy signal just flashed in the stock market according to LPR Research. And Dow theory is based on the relative price action of the Dow Jones Industrial and the transportation averages, which is INDU and TRAN, so TRAN. The buy signal suggests there is plenty of more upside ahead for the stock market according to LPL Research. So win streaks and confirmation after spending most of the year in consolidation range, the INDU, which is industrials, has finally started to play catch up with the broader market. And this is something that I actually talked about in one of my previous videos. If you guys remember, that we were seeing a very, very broad-based rally. And not only that, in the last 1 month, in fact, we have seen tech sector really just go sideways and not really go anywhere. And a lot of the liquidity has come out of tech, out of big tech and Magnificent Seven and the core tech. And it's kind of moved over to industrials, utilities, materials, energy. Those are the sectors that are actually doing much better than technology. So that's something that we have talked about. And of course, I mentioned that there might be opportunities to play more defensively the second half of this year, considering how technology is done. The recent expansion of this year's rally beyond the mega cap space has lifted the index above resistance from November high at 34,590, and the breakout was powered by the above average volume this week and confirming momentum, including a well-timed buy signal from the moving average convergence divergence, or MACD, and buying pressure has also been steady as the blue chip index is currently on a 9-day winning streak, its longest since 2017, and since 1950, the INDU has only strung together 9 consecutive days of gains 25 times. Can you believe that? So in the last 73 years, the INDU has only strung together 9 consecutive days of gains 25 times. That's insane. Of these occurrences, 52% extended the streak to 10 days, with the longest period extending to 13 trading days. So we've never really had 13 trading days of gains for the INDU. And the chart below highlights INDU returns after a 9-day winning streak was recorded. So what that actually looks like. So you can see the S&P 500, or the Dow Jones Industrial Average, I should say, returns after the 9-day win streak's been recorded. On average, 12-month return is a little bit over 10%. And of course, a median return is going to be over 9.3%, and it is percentage of positive over almost 90% of the times. The 12-month forward returns are higher on average 9 to 10%. Now, broadening participation and renewed hope of an economic soft landing has also helped the TRAN, so transportation, rally nearly 20% since June. Again, so we have seen the rotation out of tech over to other parts of the market. And the index is now trading at a 52-week high after clearing resistance off of the February high of 15,641. And given the recent breakouts of both indexes, the Dow Jones and the transportation, the Dow theory buy signal has now been triggered. So that's what a Dow theory buy signal looks like, adding to the evidence that the primary trend for the broader market is higher. Furthermore, we backtested buy signals based on the overlapping breakouts to new 52-week highs for INDU and TRAN indexes. We applied a minimum drawdown of at least 10% to precede each buy signal and filtered for signals occurring at least 3 months apart. And the table shows INDU, TRAN, and S&P 500 average forward returns after the buy signal has been registered. And this is what that looks like. So percentage of positivity is very, very strong with 12 months out. The transportation sector looking very strong at over 17.5% since 1950s after the Dow theory buy signal has been triggered. INDU looking at over 11% and the S&P 500 over 10.5% for this particular index. Overall, this is a potential buy signal that we may want to consider. And of course, it does suggest that we need to be a little bit more defensive because, like I said in one of my previous videos, and like this actual report also suggests, that there is much higher likelihood of the market being a little bit more defensive into transportation, industrials, value, materials, energy, utilities. Those are the sectors that there could be some potential value there, as opposed to technology, which has already rallied hundreds of percents. And of course, 20, 30, 40, 50% for a lot of these big tech companies, with Apple trading over $3 trillion, Microsoft almost approaching $3 trillion as well. So let me know in the comment section down below, what do you think about this? In my opinion, I think there's a lot of indicators, yes, from a technical standpoint, that are getting triggered that might suggest that there is, more potential upside coming, but it's all gonna be down to what the economy ends up doing. If there is going to be a soft landing, and like I said in one of my live streams, if the Federal Reserve can somehow find a way to basically bring inflation down to 2% or lower, down to their Fed's target, while also keeping the economy out of a recession, that would be probably the most impossible mission accomplished, because nobody's expecting them to do both. Right? People are expecting them to either break the economy and the US to enter recession, or to not be able to bring inflation down. It's going to be elevated and then eventually break the economy by raising interest rates, for longer. So if they can do both, I mean, that's really what's going to be the most bull case scenario for the market. And the second most bull case scenario is going to be inflation comes down to a point where there's significant deflation, economy enters a big recession, and the interest rates get cut down pretty dramatically, and then the market starts rallying. More specifically, growth and technology starts leading the way once again, and we see a lot of momentum back higher for those types of companies. But part of me actually thinks that the second half of this year, as I've already mentioned, there's going to be some lag effects that take into place from the Federal Reserve as interest rates have continued to go higher. But I think it's going to be a little bit more on the defensive side and more value-oriented side, as opposed to technology, which has basically rallied over the last 6 months. But the market overall, in my opinion, are still going to close green. We're still going to be very, very strong towards the end of the year. But I think what led in the first half of this year may not be the sectors or the stocks that actually lead us in the second half of this year as well. So let me know in the comment section below, what do you think? As always, if you enjoyed this video, found it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord, Patreon is going to be down below. 16% annual discount. And also don't forget, we do have the options course available, brand new. It does expire tonight, the 50% discount. Coupon code is going to be launched if you want to take advantage of that. As always, happy investing. I'll see you all in the next video.